morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Thursday, April 3rd. Well, for those of us hoping that Liberation Day would shift the agricultural market's attention away from tariff talk and the potential for a global trade war, well, we simply just did not get our wish. President Trump's broad application of customized reciprocal tariffs triggered what looks to be a rather sizable drop on Wall Street today. Futures trading right now is looking at about a 3, maybe close to a 4% losses at the moment. At first, the market seemed to take the 10% uniform tariffs along with the 25% levies on automobile imports. Seemed to take that in stride. However, once the depth of the reciprocal tariffs imposed on the 60 worst offenders became more apparent, the stock market futures began to tumble. Probably the main highlight from yesterday's press conference was the added 34% tariffs being imposed on imports from China, taking them up to a total of 54%. All the reciprocal tariffs are scheduled to begin next Wednesday, April 9th. It's not yet clear how each country will respond. However, I've heard several economists declare yesterday's executive order to be worse than the worst case scenario. Hopefully, I remain hopeful the Trump administration will still be able to negotiate better trading relations with our global partners, that to benefit the American worker. However, that will take time. Its impact on the agricultural markets was swift. Corn futures right now are 6 to 8 lower. Bean prices 20 to 22 lower. Meal only down $2 to $3, while bean oil has pulled back over a full penny, and wheat ranges from about 4 to 8 lower. Energy prices sharply lower. Crude down more than $4 a barrel. U.S. dollar has plunged as the credit markets begin to factor in greater odds of interest rate cuts as recession fears are now on the rise. Weather-wise, heavy rains continue to batter the southern Midwest and Ohio Valley region this week. Planting delays will be widespread, while even some replanting will be necessary in areas that are impacted by flooding. Beyond this week's rains, a drier pattern will set up in week 2 of April with warmer temperatures in the west, cooler in the east. Mostly favorable weather in South America. Harvests in Argentina should be revving up, taking advantage of the drier forecast. South central areas of Brazil, however, will need to see more rains by next month in order to keep their second corn crop prospects high. We do get export sales here later this morning. Despite the pullback in corn, prices do remain well above the lows from earlier this week. There were no reciprocal tariffs added to imports from Mexico, the largest buyer of U.S. corn. Imports from Mexico will remain exempt from the 25% fentanyl tariff as long as these products are compliant under USMCA guidelines. Reciprocal tariffs of 24% on imports from Japan and 25% from South Korea, the second and third largest importers of U.S. corn. That certainly will not help U.S. corn sales in the global marketplace. We'll see what the reaction is from these Asian countries. While bean prices did gap lower, they do remain above the lows from late last month. Last month's low in July futures was 10.06, overnight low being 10.21 3/4. New contract lows for meal. Next support there is 278.50 for the spot contract, while oil pulled back from the sharp gains we've seen earlier this week. Wheat prices seem to be least affected by yesterday's announcement. So far, we have just not seen good rains across some of these areas in the Southwest Plains. They do remain hopeful for some later in the week, so we'll see how that pans out. But something definitely needed here to help improve winter wheat crop prospects. Thank you for listening, everyone. I hope you have a great day.